Hey everyone, as we know, crypto has been very volatile over the past 2 months. But despite all the volatility, when we look at the DeFi market in terms of total value locked, it actually was up in January and has performed better than crypto. Why is that? Find out now in our latest podcast. Hey everyone, welcome to the Dales Report podcast, and happy to be joined once again here today is Jonathan Wiesblatt. He is the CEO of Liquidity, that trades on the New York Stock Exchange under the ticker symbol LIQD. Jonathan, happy New Year. How are things?
Things are doing great. Happy New Year to you as well. It's been a crazy, crazy market for crypto
Hasn't it?
investors. It sure has.
What's your take on it, the last couple of weeks?
Yeah, so you're seeing a very, very tightly correlated market in crypto to traditional markets, equity markets. And
Yeah.
so if you overlay the Nasdaq to the price of Bitcoin or Ethereum, or ETH, which are the two incumbents in crypto, you'll see very tight correlations. And I think that's because the world's worried about inflation, growth, and interest rates, right? So those big macro trends are really dictating the movement and the flows of capital right now, and it's spilling over into the crypto markets for sure. So that's what I'm
So
seeing.
when we look at interest rates, it looks like we're leaning towards interest rates going up. What kind of domino effect is that going to have both short and long term on the crypto market, you think?
Right. So the Fed in the United States, they're worried really right now about growth and inflation. And when you get rising inflation, and right now it's at 40-year highs. So when you're seeing those types of impacts in markets, the Fed, one way they can combat that is by raising interest rates. So there's no doubt that we're
Mm-hmm.
getting rate hikes in most Western economies probably in March, and the signal is for four. And rising interest rates will cause a change in the flow of funds, and you'll see flow of
Yeah.
funds. That they'll come out of equities, which are at up until recently all-time highs, and they'll flow into other
Yep.
asset classes, fixed
Mm.
income, cash. Right, that'll start to attract
Yep.
capital, and other risky assets such as crypto. You've seen them selling off in anticipation of this scenario. So I do believe that at some point we will decouple again. Correlations will
Yep.
will open up right from where they are right now, which are very, very tight. And I think crypto and crypto markets will go back to trading on their own unique trading fundamentals.
It's good to know. Well, outside of that, you released obviously some very promising news earlier this month. Your second quarter 2022 financial highlights that gained attention, obviously, with many DeFi investors. You achieved quarterly revenue of US $188,229 with a 96% growth profit margin, showing just how much, operating leverage your liquidity mining operation has. So impressive to say the least. Saying that, are these margins sustainable even as you look to deploy additional $20 million of capital obtained during this reverse takeover listing?
Right. So those are all good questions. So let me back up and explain that
Okay.
the second quarter results, they were pre the financing that we just did and closed in December, where we raised upwards of 22 million US dollars. So those numbers in the second quarter, they don't show any performance with new capital raised. So on a very,
Okay.
very small balance sheet at the time, we were able to generate gross revenue of approximately $200,000 at a very high gross profit margin of 96%. 96% is high because
Big.
transaction costs on the networks or the blockchains that we're currently deploying liquidity across are very de minimis. They're negligible, which makes margins high. Now, when you
Right.
factor in the cost of protecting the balance sheet, so hedges, right, and you factor
Mm-hmm.
in the changes in the value of crypto holdings, so gains or losses, our gross profit margins or our net revenues, as I like to distinguish them as, were 78%, which is still substantial, right? Those are very, very fat
Huge.
margins, and because most of our operating expenses are very fixed and very low, the operating leverage in the business model is extremely robust, right? Which is one of the reasons why I love our business. So that's the first thing that I would mention. The second part of your question was, do we see that these yields can be sustainable, as we go out and deploy, the $20 million
Yep.
that we raised? So the liquidity pools that we're currently, allocating liquidity to are up. Some of them are upwards of multi-billions of dollars. So
Okay.
$20 million of balance sheet at Liquid Meta or liquidity is not going to move the needle for these pools. And so I'm very, very confident that outside of fluctuations in yields because of macro related events and events specific to the crypto markets, we're very confident that for the next several years, yields will remain very, very robust. Now, let me just add on another layer to why we believe yields overall in DeFi will remain robust over the next several years. So, traditional forms of capital, right? So, pension funds,
Mm-hmm.
traditional hedge funds, sovereign wealth funds, large family office. The regulatory environment is not conducive for that form of capital to enter crypto. They're just not allowed.
Right.
Like their corporate
Right.
governance and risk committees will not allow them to deploy capital. And that is the vast majority of wealth in this world. So until that capital can actually access this market, we believe that the opportunities for higher yields are going to become readily available to organizations like us. And that is the central driving thesis that we're working on, right? So
You
we
think even higher down the road than what you're experiencing now?
so I'm not going to say higher, right? Because
Okay.
whenever it's my experience in capital markets, in financial markets, whenever you have a disproportionately high rate of return in an asset class, it attracts
Yep.
capital, no matter what. And when you
Yep.
attract capital, so more demand, shrinking supply, you get price response, right? So I am of the view that we will have yields that will decelerate over time. However, as long as like the vast majorities of capital aren't chasing these returns, which I don't expect to see over the next several years, it's going to create a very long runway for growth at Liquid Meta and its liquidity mining operation.
How are the conversations going with some of these institutions and their overall outlook on the DeFi space? I know each time we have you on, we want to see how things are progressing, but do we continue to see more education and a lot more institutions warming to the idea?
So, what we know based on conversations that we're having with traditional and not so traditional asset managers and institutional investors, and even enterprises that are sitting on a tremendous amount of cash, we know that
Mm-hmm.
these organizations as a group, we know that they're curious, right? DeFi has been around for, let's call it, 3 or 4 years. It's really emerged
Yep.
on the scene since 2020. So it's very nascent, it's very new. Large organizations that are very traditional, they're very slow to adapt. But what we do know is that they are very curious, they're very interested. And that
Mm-hmm.
curiosity, hopefully, is going to be a net positive for Liquid Meta as we continue to build out our products and services. At some point, we're going to knock on the door and we're going to explain to these types of very large traditional organizations that this is an emerging market. It's not a trend, but it's an emerging and growing market, and you can actually access it and invest in it in a very thoughtful and methodical manner. And that's what Liquid Meta is going to provide to these groups. It's going to take
Just to
education. It's going to take time, Shad.
Yep, time and education for sure. One of the attributes about your operations is your quote unquote all weather business model, which allows you to secure liquidity mining revenue since performance is relatively stable in all market conditions. Saying that, are you currently experiencing consistency in generating yields in all market conditions?
Right. So we put out some news a couple of weeks ago, and over a 24-hour period, when the price of BTC and ETH declined by 10 and 12% respectively, we had
Yep.
a record revenue period over that 24 hours. And let
Wow.
me just break that down for a second, and the reasons why. When the markets are incredibly volatile and asset prices
Yep.
are either moving up significantly or down significantly, trading transactions they tend to rise. Okay, and
Yep.
when you have transactions rising, transaction revenue rises, and part of the way that we're compensated for providing liquidity is in the form of transaction fees. So greater transaction volumes, more transaction revenues, more fees to the liquidity provider, and that's why we've been able to generate a very very good gross revenue in periods of volatility. Yields will vary from time to time and by pool in periods of volatility, right? So when money is coming out of volatility, it will go into more stable parts of the market, which will have an
Right.
impact on yields. However, the yields that we are seeing across the board remain incredibly healthy, and revenues have been incredibly strong in the month of January, just given the volatility that we're experiencing. So, like I said, it's an all-weather balance sheet. It's an all-weather
Yep.
business model. We want investors to be able to see protection of capital in periods, of, uh, of, of deceleration when asset values are declining. We want to show them that we can protect the capital through the liquidity mining operation and capture upside when markets are appreciating. So, like you defined, all-weather business model for investors to participate in a crazy sector in a very sane manner.
Good industry to be in for volatility, yes?
For volatility, yeah. For stability, in our case, it's also the case. So
Yeah.
what the point is, and going back to the earlier part of the conversation, is when you're trying to appease to the curiosity of large global traditional investors that don't like great volatility
Risk.
and great amounts of risk. If you can provide those organizations with a business model like this, we just see that there's a tremendous amount of demand and potential upside.
Have you been attending a lot of conferences? I know with COVID and everything, but I'd be curious, once that does get up and running in the conversations you have, it's incredible what we're going to see as far as like the networking that's going to be involved across North America, don't you think?
Yeah, I mean, if the government would open things up a little bit more, and I don't want to get into a
Yeah.
political discussion, but I've been having meetings on Zoom now for 2+ years. It's been very difficult to
Yeah, I
move
hear you.
around. So the minute that I can and I can get out to some of the conferences and get face to face with other market participants, other players in crypto and DeFi, meet some of these organizations who I mentioned earlier are very curious about crypto and DeFi and how to access
Yeah.
it. Like that's going to be just a lot of fun, and it's going to hopefully bring in a lot of attention to Liquid Meta for sure.
Yeah. You recently announced a partnership with XLD Finance to provide liquidity to XLD's stablecoin-based ecosystem. XLD's ecosystem project, which is called XSpend, will allow users to immediately use their GameFi tokens or stablecoins earned from play-to-earn games to pay for necessities and utilities. So walk me through what this partnership can bring to Liquid Meta and in terms of scaling your liquidity mining operation to ultimately, let's face it, generate cash flow.
Right. So let's take a little bit of a step back and let's talk about why the need for a company like XLD is so meaningful. So there is an emerging trend in crypto called play to earn. And this is
Okay.
where players can play a game on a mobile device and they can earn, a disproportionately high amount of revenue or income relative to what they would earn from their day jobs. And a lot of this growth is happening in emerging markets where, incomes are much lower than here in the West. And the other contributing factor to the growth rates for users in emerging markets is more people have mobile devices than they have credit cards or bank accounts. So it becomes a very intriguing proposition for people in that part of the world.
That
Axie
wild.
Infinity is a very, very popular mobile game that a lot of users are using in places like the Philippines, Indonesia, India, and other emerging markets.
Yep.
There are more than 2.5 million active daily users that play this game. Those users, they receive an SLP token in return for playing, right? So you
Yep.
play, you win, or for various components of the game, you receive a token. Those tokens have real world value. Now, what
Mm-hmm.
XLD provides, they provide an off-board network, so like a PayPal, that offers these users, these gamers, the opportunity to use the tokens that they collect by winning in a game or playing or participating in a game to use it for the real world, right? So if you're a laborer in the Philippines and you've collected $200 for playing Axie Infinity over the month, and you want to use your SLP tokens that you've earned to pay for your telecommunications or utilities or purchase an airline ticket, which actually people are doing, then you can use the XLD network in order to off-ramp those instantaneously, pay your bills in the real world. It is a very unique opportunity. Now, where Liquid Meta comes in is this company, as it moves from a CeFi business model to a DeFi
Yeah.
business model, in order for
Yeah.
these transactions to occur, it requires liquidity. And Liquid Meta is a liquidity provider. So just like we're providing liquidity across decentralized exchanges today, there will be an XLD component that will require liquidity inside a
Wow.
decentralized environment. And Liquid Meta
Smart.
will be able to help to promote transactions between providers and users. And it's a very, very adjacent component of our business. And we see exponential growth in their business model. More transaction
Well,
volumes, greater demand for liquidity, greater rates of return, more cash flow, more revenue to us.
how much do you think earn to play is going to change our whole landscape? Because you look at some of these other countries abroad from North America, phones and technology are a lot more valuable than, say, somebody's bank card or wallet, are they not?
100%. And this goes back to what I was saying before. More people have access to mobile devices than they do to bank
Yeah.
accounts. Most of the world is unbanked. And the reasons for that, I mean, the list is very, very long. But banks, traditional banks, they do not lend to people in emerging markets because incomes don't support the requirements to open bank accounts or to provide
Mm-hmm.
credit or credit cards, right? So people are finding other ways to bank and to finance their lives, and part of that is deep in crypto, and DeFi is playing a huge role for that. And DeFi, as we know, is providing more products and services without third-party intermediaries, and that's why we're seeing tremendous amounts of growth outside of North America, Western markets, and in emerging markets. These are the types of trends that Liquid Meta is seeing today, and we're trying to expose our business to. So back in 2020, DeFi was an emerging trend. It really took off. Last year, we saw NFTs as a subcategory of crypto. That really
Yeah.
took off. This year, we're really expecting to see GameFi become one of the next emerging trends.
It's amazing. It's for a country that is the leading technology in the world. It's incredible how much the rest of the world outside of North America is years ahead of where we are pertaining to this particular landscape. Is it not?
Yeah, I completely agree, Shad. And for some of the various reasons that we just discussed, including, global financial systems and structures and the way
Yes,
people bank, that I think that's a driving factor behind those reasons.
it's great. Finally, let's talk about your board of directors and the recent appointment of Clara Bullrich. Am I pronouncing her last name
Yeah,
correctly?
that's perfect.
So she was appointed to your company's board of directors. Clara is a partner at Alvarium Investments, which viewers pay attention closely to this, is in an international multifamily office with over $27 billion in assets under management. So how should the appointment be viewed in terms of interest from investment funds that have, I guess, interest in the DeFi space?
Yeah, so let's just put aside Alvarium for a second. And we're not
Okay.
going to put it aside for too long because it is a very, very large global family office organization that Clara has an instrumental role in as an operator and as a key person working inside the organization. Let's just put that aside for a second. Clara's also the founder of a VC organization called the Venture City, which is based in
Okay.
Miami. And so Clara brings a very, very strong background in technology, early stage technology investing, and company building. So she not only brings the expertise and access to large global family office, but she brings in the expertise of helping us and advising us on building a small emerging technology organization. So we are very, very excited and proud to add Clara to our board of directors, which is already a very professional, very experienced group. And she brings the technology and the company building component to an already strong group of professionals to the team. So really, really happy to have Clara on board.
How did the relationship begin?
So Clara was introduced to us through some of her partners at the Venture City, and
Okay.
we went from there. She's very bullish on crypto. She's very excited about DeFi,
Yeah.
and she's very I don't want to put words in her mouth, but I think she's very excited about Liquid Meta's role in this emerging category.
It's great. Well, I got to hand it to you. 96% gross profit margins. What was the feedback like just from a lot of your investors that heard that news? Because that's incredible.
Yeah, so the current investors, they're excited. They see the profitability potential of this organization, of this company. They see really the potential for having an all weather, as we mentioned earlier, an all weather business model for crypto as being a very exciting feature for investors, current and prospective. What I would like to do is I really would like to get out in front of other investors that might find this opportunity of interest. It's a great story. It's a great business model. It's a growth company. There are so many different avenues, adjacent avenues, and complementary ways for us to grow our business and our team that we're evaluating every single day. And it's really important for me to just get out, tell the story, and educate the market on exactly what Liquid Meta is, what the business model is, and how we're going to be a key provider of infrastructure in this entire decentralized industry.
Keep up the great work. I know we're just in the early stages, but great, obviously, earnings reports. And most importantly is that we're just getting started. But I appreciate you taking the time to check in with us here today.
I appreciate your time, Chad. Thanks a lot. Looking forward
All
to
right.
doing it again.
Thanks, Jonathan. Yeah, you as well.